Namaskaram. So next clause under Form 3CD is clause 9. Clause 9 is applicable only to the partnership firms or LLP, my dear friends. So be aware of this clause. It is very important if you are doing the tax audit of a partnership firm or LLP. And that too, if there is any change has happened either in the partnership firm, that is the partner has been added or been removed from the firm, or their profit sharing ratio has changed. Okay, so their profit sharing ratio has changed. So two changes, either there is a change in the constitution or either there is a change in the profit sharing ratio of the firm, then this particular clause is required, under which you are supposed to do the reporting. Particular under this clause should be verified from the instrument or the agreement. Obviously, whenever they are saying there has been a change, you need to check whether the change was done through the instrument. Instrument means agreement, my dear friend, or any other document evidencing partnership or association of the person, including supplementary document and other document affecting such change. So you are not only supposed to report on the change, you are supposed to check the documents. You verify the documents of the partnership firm, check the agreement, keep it in your file, because tomorrow you are answerable for this particular change. Now, what is the practical audit checklist that one should follow? You can understand the reporting is not that complicated. Whatever changes happen, you have to report. If new partner has been added, you have to give his name, PAN and everything. And you have to tell them that this is a change that has happened, or partnership ratio has changed. Earlier it was partner sharing ratio was 1:1:1. Now it is 50:30:20. So you have to tell that. So only giving declaration in 3CD is not enough. You have to follow a detailed checklist, and we will go through the practical aspect of that. As an auditor, how should you check clause number 9? Okay. Inquire whether assessee is a partnership firm or limited liability partnership. Okay. Sometimes it is also applicable for AOP as well, but I presume that you people may not have much work of AOP. Partnership firm and LLP are the regular client that we are having in our firms. Obtain a schedule from the assessee indicating name of the partners or members and their profit sharing ratio. So you need to obtain this particular list. What is the current list and what was the list last year? Also see the original copy of the partnership deed and LLP agreement. You don't only take the declaration from them, you also have to check it through the partnership deed and LLP agreement and find out the name of the partner which are there in the original deed. Inquire whether there has been any change. Inquire, just go and talk to them. Talk to the management. Was there any change in the partners or members or their profit sharing ratio during the last year, since the last preceding year? Okay, we are comparing with the last year. Also check the copy of the deed of the last day of the preceding year and as on the last day, first day of the previous year consent. So you have to check this. Okay, check the deed, last year's deed and current year's deed. If yes, ask assessee to produce original copy of the amendment or admission or retirement deed. Original copy, not photocopy. Original copy, you have to check whether the stamp duty has been paid or not. Everything you need to check now. Note down the details of the change and state the particulars thereof. In respect of the audit of the year 2020 to 2021, any change after 2020 shall be reported. Okay, they are just giving you reference. Any change which has happened after 31st month. So we will also report. For us previous year is 21-22. So whatever changes happen in previous year 21-22, that change we will report. If there is any change in the constitution of the firm or AOP after the first day of the previous year, find out the change and report the same. If there is any change in the partnership firm or member of association of a person and their profit sharing ratio since the last day of the preceding year, the particulars of such change must be stated. All the changes occurring during the entire previous year must be stated. Okay. All the changes. What they are saying, if in April you have made change, and again after 6 months, in September you have made change. So first change as well as second change, all the changes you have to mention. Okay. Check the retirement deed, amendment deed, admission deed to ascertain the change in the partners and the profit sharing ratio. Obtain management representation, MR, that there is no change in the partners or members and their profit sharing ratio. And if there is any change in that respect, then get the change is adequately disclosed. See whether the change is adequately disclosed in ITR as well as in your Form 3CD. So this is your responsibility. So technically this particular clause is applicable only on the changes Nowadays LLP is taking charge, and but we are like, whoever comes to us for taking the for incorporating partnership, we always tell them to incorporate a LLP. There are two benefits for that. First of all, partnership will be registered under state law, whereas LLP will be registered under central law. To register partnership, we still have to submit documents manually to the ROF, and to registered LLP, we have to do everything online like a company. Adding partner, removing partner from LLP is easier because it is routed through ROC portal, which is easier job. And the most important benefit of LLP is that LLP is having limited liability partnership. That means as per Partnership Act, the liability of the partners is unlimited to the firm, but whereas in limited liability partnership, it is limited to their contribution ratio or their capital that they have taken commitment. Their personal asset will not be attached if tomorrow some default has happened in the LLP and it was not due to their own negligence, so they can be relieved from the gross liability of the firm. So yeah, nowadays a lot of LLPs are being incorporated, and I also run 2 LLPs. So I believe you people are aware of clause number 9 now. Whenever there are any changes, okay, you have to mention that changes, okay, in the clause 9. Along with the deed, you have to do the detailed audit. In fact, as an auditor, you should also inquire why such changes were done, and you need to think about going concern assumption and some other business restructuring, whether the company will be in existence or not. So all those things you need to take care of that, because changing partner is not a small thing in the organization. Changing partners or partners ratio is a very big thing, okay, it's a material thing, and that's the reason you should put little more emphasis on clause number 9. Thank you.